When did you make that call? Like a year ago?
Yeah, it's our birthday. Happy birthday.
Is today like an anniversary
pretty
call?
Close to, yeah, pretty close.
You and David Bloom have really an outlier big house call on strong dollar. Why did everybody get weak dollar wrong?
I suspect, well, two parts. I think they thought there was going to be a US slowdown. That bit they got right. And they thought that therefore there'd be a growth convergence. But of course, we've seen all ships sinking in the relative world of currencies. That's been a wash. And I think what they also, maybe the second thing is what they fixated incorrectly on was the delta, the change in rates. They thought about the Fed pivoting, didn't take account of everyone else pivoting, but also forgot the level. US is a high-yielding currency, at least in G10.
Right.
And they forgot that.
What I find interesting is a partition. I'm doing this with my hands, folks. There's too many charts involved for radio. One of them is the Asia look, ADXY, plunging dollar stronger.
Yeah.
The soup of the euro. Forget about sterling.
Yeah.
The soup of the yen. I mean, which do we focus on to glean when we break out of this range?
Well, for me, I think it's that soup you described, that euro dollar, it feels like it's done nothing, but actually it's just been this glacial grind lower. And that's been reflecting this glacial grind higher in most dollar indices, whichever one you look at. And what we're seeing is, for example, on the Fed's broad dollar index, Bloomberg's broad dollar index, we're just beginning to see that dollar pushing again at the top side of its range. I think that's where we get the break. I mean, that's what HSBC has long maintained. It's not been a glamorous rally, but it's been a relentless one. As I say, I kind of described it as glacial, and it gets there. And yet, bizarrely, the consensus, it feels a bit like Prime Minister May. They kind of know they're wrong, but they're just sticking to it because that's what they've been doing for the last year.
Okay, what makes you worry, Daragh, about the U.S. economy? Is it, some of the weakness that we saw in housing, or is it something else? No,
there are patches of softness. We've seen occasional disappointments on the manufacturing PMI, or ISM, as they have it here. As you know, the housing market has been occasionally patchy, but there's no great angst, I would say. I mean, we had a nice 3% print for a while, at least on U.S. Q1 GDP revised, but, the run rate of this economy is going to be 2 to 2.5%, whereas you've got, let's say, Italy looking at 0 or thereabouts. So, honestly, not particularly angst-ridden about the U.S. economic angle to the dollar. It's the relative game of how they're doing compared to everyone else, and they're stacking up pretty well, I would say, in that metric.
Okay, is there anything else that you're looking at there? I don't know if there's a play with yen that actually has been unloved that we should be looking at right now.
Yeah, I mean, look, our forecast for year-end on dollar-yen is perhaps the one exception to our dollar bullish view. We've got 105 as where it finishes, but that reflects all the kind of topics you've been talking about: US-China trade war, these new tensions over tech, concerns about global growth. What does this mean for emerging market growth? All of those, I think, are headwinds to dollar advancing against the yen.
Yeah.
And I think that's where we're at. So that's one of the outliers, even for us, in our dollar bull story. I mean, actually, that's the only forecasting where we actually agree with the consensus on G10FX.
Let me go log here with Daragh Maher right now. This is a great chart, as Mr. Maher points out. Glacial euro weakness. I love that. We're going to go off physics here. Weaker euro from a 160 back 10 years, back years. Here's parity down here. We never got there. Parity, parity watch, parity watch, parity watch. You nailed it, Daragh. I mean, it's truly just like a linear function, isn't it?
Yeah. But the problem is, it doesn't strike the markets as terribly exciting, but you do make money off it. You're short euro dollar, you pick up your carry, and spots moving in your favour. So, it's not the glamorous stuff. I saw Bloomberg carried a story this morning about 1,000% returns in some of the cryptocurrencies.
It's not glamorous. It's like rooting for Manchester United.
Well, I'm Watford. But look, it is. I'll tell you what's different about euro dollar. It's a big trade.